Hello, my name is Alain Recoul. I'm the tax deputy leader of the indirect service line of Taxand. And with Mahesh and Kevin, we are absolutely delighted to present you this session. As an introduction, I would like to highlight that we have already 150 countries operating a VAT system, with revenue accounts for more than 20% of the global tax collection. Asia is a very, very good example of this global trend. With new VAT implementation, we'll speak about India, we'll speak about Malaysia, and also rising VAT rate for countries which have already implemented VAT.
What I will be covering in India for the next 15-20 minutes is a recap of the current indirect tax framework. To say the least, it's quite complicated, and we're facing a lot of companies are facing several challenges, whether on the policy side or on the administration side. We will focus a little bit thereafter on the cost, on the taxation of cross-border transactions, whether on the goods side and as well as the services, and then talk about the future of indirect tax in India, which is really the GST. In India, we are in a phase of transition, so to speak, on the political side, and it's relevant to spend a couple of minutes on that in understanding the tax environment and challenge that we have. A lot of policy decisions get a little slow or stalled on account of lack of political will. We have the general election results out tomorrow, and we hope to have a new government in place really soon and an election in June. A budget in June, whereby we will have a clear roadmap for the next 5 years of where our indirect tax and our taxes are heading. India, in addition to the policy being and the regulations being a little complex, has a aggressive tax administration. We have high-pitch assessments and audits that take place across the various indirect taxes that we have. You may have a VAT officer completely taxing a transaction which you would think is a service, and he'll ignore the fact that you've paid a service tax, and vice versa. India is broadly agreed is to have a model which is similar to Canada and Australia, which you have a dual GST, so every invoice would have a central GST as well as a state GST. So let's say they settle at the 20% rate, and 10% goes to the center and 10% goes to the state. And I go to a supermarket in Bangalore where I stay, and I purchase a product for 1,000 rupees, then I will have a central GST and a state GST.
Today, I will mainly discuss the VAT and business tax, because consumption tax is not under the current reform. So I think in the year 2020, the remaining business tax scope maybe only remaining the very limited scope. It will be culture and sports, entertainment, and sale of immovables.
Talk about indirect trends in 7 countries after China and India, mainly Malaysia, Pakistan, Singapore, Indonesia, Thailand, Japan, and Korea. We strongly believe that in-house indirect tax will be bigger and bigger in companies. Clearly, the fact that this in-house indirect team, they are not only responsible for reducing the risk of double taxation. They need to spend a lot of time with international and local organizations to keep compliance costs down. Please keep the compliance cost down. That's key. If you want to keep the compliance cost down, that's the third tax and take. You need to have in-house technology capacity. The right answer is to have a framework, indirect tax framework, which totally fits with the need per business unit, to understand the supply chain of the business unit and to take the correct and adequate measure by business unit. That's far more complex. And now, more and more, we are seeing people, indirect tax people, they are specialized not by country. We don't want one guy specialized by country. We want one person being specialized on one business unit of the company worldwide, because the supply chain will be worldwide. That's the trend, and the trend will clearly be bigger and bigger in 2020.